Shares for beginners.
I think crowdsource funding, the legislation, ASIC opening that up, look, you'd have to check my fact on it, but I think it's only been the last couple of years that it's become a real thing in Australia. Definitely in culture, but in the US and the UK, it's mainstream. Like 19% of the companies in the UK that have a billion dollar valuation or more, utilise crowdsource funding at some point, which meant that they brought on mum and dad type investors to back them at an early stage to get them through to the next level when a venture capitalist firm or someone like that would take them then to most likely the stock market.
G'day and welcome back to Shares for Beginners. I'm Phil Muscatello, and today we have a little bit of departure from normal programming. It's getting close to Christmas and I'm thinking motorbikes. Not that my wife will let me have one. However, I am pleased to welcome a guest who makes them. Hello, Brad.
G'day, mate. Thank you for having me here. So I'm going to try and change that and get you on one here.
Oh, I'm looking forward to it. I'd love to. Brad Smith is the founder and CEO of Braaap Motorcycles. Is that the correct pronunciation?
Yeah, or Braap. The more
Braap.
A's, the more excited you are.
I'm calling it Vroom Tech. He's been named as the Australian Young Entrepreneur of the Year twice, International Young Entrepreneur of the Year, and runner-up and Young Australian of the Year for his state, which is it WA?
Tassie.
Oh, Tassie. Right, sorry about that.
Yeah.
The state that's always left off the maps of Australia, isn't it?
That's it.
Brad served on the advisory board of the Reserve Bank of Australia for small business, and in 2013 rode his Braap to a fourth place at the world title in Las Vegas. What world title was that?
The mini moto in an indoor arena in Vegas was awesome.
What an indoor motorcycle arena.
Yeah, so smaller bikes, a bit more like a BMX size bike.
Yeah.
They take a hockey stadium and fill it with dirt, and we race motorcycles.
How was that?
Incredible. Yeah, I got to go about 6 or 7 years, and an incredible experience. So
yeah. There's apparently some fantastic motor racing experiences around Vegas, and there's also you can get in a car and there's tracks around the place, aren't there? And where you can have a fang.
Yeah, so true. I was always too nervous and getting ready for the motorcycle race, but I did see a lot of the team that we took, mechanics, that they would love to go on they had like the exotic car experiences and that they loved it.
Yeah. How many broken bones have you had?
Well, on a Braap, I have to say none on a Braap out riding for fun. So that's the first disclaimer to try and get you across onto the motorcycle. Completely safe. We're not racing and we're not on a Braap. But when I was younger, racing full-size bikes, broke both my arms at once, broke my leg and my arm at once. It's quite a few. Got a list. But
What sort of bikes were you racing?
I raced Suzuki 450s, Kawasaki 250s, and then in my
what class? What class was that in?
Mostly pro open, so state titles, and then the nationals, and then also in the juniors, rode A grade in the juniors on a Kawasaki 125, and then Yamaha 80s, and had quite the variety, which was so awesome.
Were you always entrepreneurial as well as being mad about bikes? Were you one of those kids always coming up with business ideas? Yeah,
I guess it's kind of, I think part nature, part nurture in that, my parents grew up in very low social ec. My mum had 8 brothers and sisters. My pop was in a wheelchair. They're very, very minimal living, horrible standards, really. She grew up in like that, and my dad similar. And when they got married, they decided that their kids weren't going to live the way they did. So they were incredibly hungry to, just kind of build some wealth and do something, financially a bit better than what they'd been given. And that sort of translated into my sister and I coming on that journey because mum and dad were growing and learning. And, from like 12 years old type thing, if mum and dad were learning something, we were on the ride. Like we were paper trading the stock market at 12, 13, 14 and doing our own. We weren't just doing pocket money. We got a little bit of pocket money, but we were encouraged to go out and work out how to add value to the community in return for something, like mow some lawns and get paid. And then when you get paid, what are you going to do with that money to multiply it and to build some wealth and to give some away? And that type of thing. So I think it was part like my nature is definitely opportunistic, definitely always looking to create value, but also like my parents created an incredible culture to allow us to, go on this education journey of wealth creation.
That's an incredible story. I mean, it must be great to have had parents like that, just sort of pushing you and giving you ideas and inspiring you to do stuff. Because, I don't know, a lot of people just don't have the kind of get up and go to get better.
Oh, it's so true. And, I think no matter what you start with, what you're given, if it's nothing or if it's a lot, it's irrelevant. Like the Aussie story of like, I was given nothing and I made it. That's a great story. But there are also a lot of people, especially Gen Ys, who actually have got parents who've given them nice lives. Like, I didn't live out of the same circumstances my parents have. So I've got the ability to multiply and create value for the world from a different perspective. And, we definitely grew up like at the lower end of middle class, but my parents were hungry to grow. So that translated in to my sister and I having, parents that backed us and allowed us to go out and make mistakes. And it was both a blessing and a huge challenge to have parents who believe in you so much. So for example, my dad's very conservative. Like, they bought a house, they bought a block of land, they built their own house, very slow. It's probably still not finished. Where my mum was like, let's just make it happen. Like, mum's the sort of person who would book a family holiday to Queensland on a credit card and then tell dad about it and figure out the money later. Like, she was a pretty reckless and make it happen, but a real believer that it would always work out and we'd find a way. And that kind of translated into, I'd been trading the stock market for a few years, paper trading, then saved up 5 or 10 grand of my own money at kind of 16. I was trading options on the US market, and I was dollar cost averaging a few blue chips here in Australia, just building a plan really. And mum basically allowed me, convinced dad to mortgage a family home to leverage down and let me use 50 grand to trade, like as a unsupervised as a 16-year-old. Like,
unbelievable.
That's incredible. The more I look back, like I have kids now, the more I look back at that, and especially how conservative my dad was and how limited the resources my parents were to go and do that. That's incredible. And it taught me a lot of lessons because I realized the responsibility that was on my shoulders, and especially unsupervised, like, go for it. We trust you. Man, as a young man, to what a rite of passage type thing. So,
and how did you go?
Yeah, everyone's sitting on the edge of their seat. Trade, buying put options, incredibly volatile. Buying and selling put and call options, pretty good, like not bad. But when we started writing naked calls, that's when things got really dangerous, like leveraged naked calls. That was at one point I was getting margin called and had to roll my position for more than what our family home was worth. And that I told my parents, but that was difficult. Like that's a huge lesson in risk mitigation. And yeah, so we did you
manage to trade out of that?
Yeah, it did. Took a couple of months. We traded out of it, and thank God it worked out okay. So I didn't swing it out of the park. I didn't make millions and have a head start from it, but the lesson on managing my emotions, managing risk, being conservative, limiting your downside, but allowing your upside to run, like that type of thing, on the job training and thrown in the deep end. And also got taken under the wing of some pretty incredible share market people that, allowed me to come and sit at their house and trade next to them and learn and just be open to what they do, which was, I don't know how you'd put a value on that.
So without getting into the weeds of explaining what's going on, it's just a warning for any beginners in the share market.
Yeah.
Don't sell naked options. Don't worry what it means, but you'll know what they mean if you start doing it, because that's highly risky and highly dangerous, isn't it? Yeah,
it is. It is. I think anything with leverage, you've got to, I'm sure that you talk about it a lot. Like, the stock market is not a place to gamble. It's a place for asset allocation, discipline, and a structured approach. And yeah, as a young person with ambition, I learned that the hard way.
So let's get back to business and tell us about your work on the advisory board to the Reserve Bank. What did that involve?
Oh, that was a real. Actually, I've got the pad right here, and
Okay.
my daughter. It's like my prized possession, an RBA pad that I got given. Notepad. Never use it, except my daughter came to my office, found it, and then scribbled all over it. She's 2, so
Yeah.
it's. It was an incredible experience. They have a panel of small business owners that really they present data to, get real life feedback, that type of thing. And it was incredible just to be next to shoulder with some other great up and comers, but also to see the data that they produce and, how they do their best to keep the economy in good check. It was an incredible learning process for me. And to be honest, at the time, quite over my head. Like, I wish I could go back now.
Yeah.
And I think it's a hindsight thing. You realise what a privilege it was, and to meet the governor and have lunch and stuff like that afterwards. And yeah, it's a real privilege.
That's actually quite encouraging to think that the Reserve Bank, we sort of think of it as being, up there on Mount Olympus, and it's a little bit untouchable for normal people. But they actually do reach down to try and find out what's going on at a bit more of a grassroots level.
Yeah, I think that that's what the panel they invested in, and felt like we were listened to and heard. So hats off to that.
Mm-hmm. Is there any specific stories about what kind of policies you might have had input into?
Oh, it was more so for small business. A key driver was how tight the credit market was, our ability to get debt. Really, that was a real key topic of conversation. Especially, I think it was like 2013, 2014, 2015, if I remember correctly, around that period. So yeah, access to capital for small business growth was a critical issue at that point. So we talked about that a lot. Obviously, housing stuff, data would drive a lot of the topic, and obviously the interest rates that the banks were passing on to both residential, commercial, real estate, and then business finance. And yeah, I found that is the key topic, and also it was very relevant to me. My biggest issue was always access to capital. So.
So how long have you been operating Braaap Motorcycles for? I mean, it's quite an old business now for a young bloke.
Yeah, I know. I keep talking like I'm a startup. We keep that startup mentality, but it's been since 2005. So yeah, 17 years.
Oh wow! And how did it start? What was the idea, and how did you put it all into action?
Well, I wanted to leave school in this year 10. My parents asked me to stay to finish year 10. I thought I'll start year 11, and I didn't have any better plan really, so I just started. But I knew school wasn't really for me, and I wanted to trade the share market. I was fully focused on that, and mum and dad were a bit hesitant to say leave school and trade the market, kind of do the market but do school too. And then
even after mortgaging the house on your behalf.
Yeah, exactly. Yeah.
No, but you've got to finish school yet.
Yeah, exactly. And then I got to the point where the motorcycle business was starting, and I found a lot more fulfillment in the motorcycle side of things because it was a passion play as well, probably more so at that point. So then I convinced mum and dad I could leave school if I got an apprenticeship. So I started that. And anyone who knows me knows that that's a bit of a laugh, really. I'm definitely not cut out to be a tradie, and hats off to them. But I started that, and that allowed me to stop school, and also gave me more time and some income. So really put that into, I was trading the markets on the US overnight, and then doing my apprenticeship and my motorcycle business through the day. And then after about sort of 9 months, the motorcycle business was taking off. So pulled out of the apprenticeship and got into it. It was a really fast learning curve because my real vision and my passion was that I wanted to make motorcycling accessible and affordable so my mates and people around me could, enjoy motorcycling, especially non-motorcyclists. So I saw an opportunity for this new type of bike, designed one, imported it, got ripped off, lost all my money. The bike was no good. Then I went to China to find a factory to build this bike that I'd designed, and got laughed out of over 50 factories. No one wanted to work with an 18-year-old kid with a peroxide blonde mullet, no money, no idea how to sell the bikes. But, persistence paid, and I found a partner and just got back and got started. And the momentum started to build really quickly because we nailed a bike that was in demand.
So what was that bike? What was the nature of it?
Yeah, well, I guess people might know them as like pit bikes type thing, but we call them super light bikes, which we kind of say it's like a BMX on steroids. It's a smaller bike. At that time, there are 125cc engines. So it's a bit like if you drive a go-kart, you're probably only doing 80 k's an hour, but you feel like you're in a Ferrari because you're so low to the ground. It's the same type of effect. It's a bit smaller bike, a bit smaller engine. It's a lot safer because you're slower, but the adrenaline rush and the feeling of like riding is the same as, elite level, top of the line, race bikes. So, but we could build a bike and sell it for like less than $2,000 and make great margin. So, and at that time as well, finance was so easy. Like GE were doing loans. You could literally use your phone and text message them and get a loan in like 2 minutes. So we just, on that, before responsible lending was a real thing, and GE and the major lenders were just going nuts with lending, we really sold into that, and it did really well.
So it sounds like you most probably were learning multiple things on the run. I mean, you're talking about manufacturing, you're talking about capital management, you're talking about marketing. Is that what it was like? I mean, was it just you and your partner doing all of this? And what was kind of the most important things that you were learning at that stage?
Yeah, so it was a lot of learning, that's for sure. I mean, naive ambition is a powerful thing sometimes when you just get started and figure it out on the run. But there was so many things going on. I was really a one-man band, but then, I was able to start employing my parents and our first employees, and, it really became a family business.
Your parents have been great to you, haven't they?
Oh, they've been incredible. It's pretty funny. I moved out of home and moved over here to Melbourne, and my sister and I were living here, and they came and stayed about a year later and said, "We like it here. Can we move in?" So we've kind of been that type of family. But so it was a huge learning curve, and on the job training, really lots of risk, lots of mistakes. I think sometimes the best position to be in is to have your back against the wall and to have to figure out a way. Like there's nothing like it.
So is there any overall Braap business model that you've honed over the years, now that you've got a couple of years under the belt?
Yeah, it's pivoted a lot. We went from our own retail stores, like I opened up a few shops of our own. We had 5 dealerships of our own. Then we moved to a franchise model where we're selling franchise. Then we moved to a dealership model where we sold agencies inside other motorcycle dealers. And then now we've pivoted to be direct to consumer, really leveraging the website and the e-com. And actually at the moment, we're starting to building around the e-com. We've mastered that now. We're profitable. We're, selling a lot of bikes. But now we're going back out to bringing on dealers like agents, or dealer agent franchise, however you want to call it, but physical locations again. But with the lead generation and the website being the critical bit. And probably the key thing for us has been how we manufacture the motorcycle. How we sell it changed a lot, but being able to do contract manufacturing has been the golden gem for us, because it's meant that we can scale up and scale them down in line with our demand, and that means that we can protect our profitability. And we've been able to navigate some incredibly difficult times, like 2015, 2016. The media, legal is incredibly difficult for us and for me personally, but we were, by the grace of God, able to navigate through it and get over to the other side and scale down and batten down the hatches and, build a robust business model on the other side.
So many businesses these days, especially e-commerce businesses only, and software as a service, it's all about burning a lot of cash as you build up your position in the market. It's got to be a bit different for you, though, hasn't it? I mean, profitability is quite important, isn't it?
Yeah, I wish I could. I get jealous of those guys. I have to produce a profit every month so I can pay my bills. And I have competitors who don't make any money. But yeah, it's incredible, especially competing against American companies. One of our American competitors lost $19 million last year. Haven't sold a bike yet. They're a startup. Lost $19 million. Raised something like $25 million between debt and equity at a $60 million valuation. So their company's worth more than double what mine is, and they haven't yet, produced a profit or sold a bike is incredible. So things like that happen in the marketplace that you realize that some people are kicking our butts on how they structure the capital side of their business. And I think we need to learn a lot from that and make sure that we build a business that shareholders can get a return from too, rather than me just hold on to everything. So that's an area that I've been trying to improve on. How do we maintain the small business, family business values, and we've got to produce a profit every month, but utilize the ability of the markets to scale up and to maximize our opportunity and bring shareholders along for the ride. So that's my current learnings and current journey we're on.
So who are your competitors? It doesn't sound like it's Yamaha or Honda or Suzuki or Kawasaki. There's other players in this kind of space?
Yeah, it's an interesting one. I mean, yes, like anyone who sells a motorcycle at the end of the day is a competitor. Yes, I would say the segment of like the commuter bikes, the learner approved bikes, the lower capacity CC bikes from any manufacturer is our competitor. Then there are independents, especially where our mission at the moment is to lead the mass adoption of electric motorcycling. So our electric bike has competitors mostly from independent manufacturers that you've never heard of. So we go from selling 400cc bikes where we're the unknown guys, we sit next to Honda, to now we sell electric bikes and we're the most known brand. So it's always pivoting on the customer focused side of the business.
And what was it like changing to e-bikes, electric powered bikes? Is there a big difference in the engineering and retooling for that?
Yes and no. I mean, at the end of the day, we buy a battery and we buy a motor. So we've got great partners there. So that's a big risk and a big pivot, which we've, now are a few years in. We're actually, I think, 7 years into electric now, but we only just started delivering bikes about 2 months ago and we started selling them about a year ago. So it's been a 7-year project. Some of those years were dabbling. But really the last 2 years has been, we've got to build this thing. We've got an opportunity to take a leadership position in the market. So I wouldn't say it's been we're not trying to be cutting edge. My vision has been to build a profitable motorcycle company that creates value for shareholders and myself. But to do that, we've got to be the highest unmatched value product in the marketplace, which means that we're not Tesla, we're not Ducati, we're not trying to win MotoGP, so we're not in this race of R&D and cutting edge technology. I found a whiz kid who built batteries and we've purchased them. We found a company who built great electric motors and sold hundreds of thousands of them around the world. We've done a deal with them and adapted one of their platforms to be ours. So we're not trying to be cutting edge, we're trying to be the best value. And that means that we're a bit safer in that we're not putting all of our time and money into a technology that could get taken out by another person at any point. So it's an interesting play.
Yeah, you've got to keep the prices quite low, don't you? And you can still remain profitable. That's been a challenge for you?
Yeah, I mean, when you never want to race to the bottom. Like at the end of the day, yes, we're unapologetically the best value, but we are that because of our business model. You've got to pay up front for a bike and then let us build it. That means that, some people don't like waiting. So if you want a bike today, you're going to have to go pay 2, 3, 4, 5, 6 grand more and get one from a showroom. But if you want the cheapest, best value, pay us through our website, let us build it for you and deliver it once it's built. The other thing is we don't have showrooms anymore. So we have about 50 less staff and about 5 million less in rental expenses and other expenses. We pass them on to the customer. A bike that used to be 4.5 grand, we were able to sell for about 2.5 grand and make the same margin. So customers loved it.
Let's just zoom out a bit. I want to take a really big, 360-degree view about how you view capital in the business. So obviously you've gone from, quite expensive loans from GE, I'm assuming, to now equity, crowdfunding and so forth. But what is the role of capital in your business and how has it changed? Yeah,
I mean, it's a ever moving problem and opportunity for us.
Yeah, it's not going to stay in place for you from day to day.
But capital's a resource that's required in a business like ours. So we're inventory heavy. I think inventory businesses are incredible. That's something that I think I'll commit my career to now. Is probably motorcycles specifically, but inventory businesses are incredible because you've got a product, you've got something tangible, especially something that's not perishable. Incredible. But the downside is you need the resource of capital to build it. So for us, we're always balancing our ability to get our hands on debt at good rates and also bring on equity in simple forms. So, I mean, if you use equity, you're diluting, obviously. And my goal is to IPO in a couple of years. So I want to dilute myself and my shareholders as little as possible. So we just raised about $1 million over the last few months. And that was great for growth and increasing our inventory. But we would prefer to use debt for the sake of inventory, because really debt is should be a part of a motorcycle business. You don't really want to use your own cash or your equity for the sake of a revolving facility, like a trade finance facility. So we use the both. You need both, especially in a company that's small cap like us. We've done equity crowdfunding, so that's invited. We've got about 250 shareholders. So we've done private rounds of equity funding with high net worth individuals. And normally people find out about that by having a relationship with a corporate advisory firm and, being early stage investors. And then we've gone out and used the equity crowdfunding platforms. We used a platform called Swarmer, which allowed people, retail, normal people, mum and dads, to invest up to 10,000. So they're limited to that. And it's interesting. So I think for us, we'll continue to use a blend. But at the end of the day, I'm the founder and all my wealth is tied up in Braap. So I'm incentivized to IPO or trade sale or do something like that. And my shareholders want me to do that. So we're all pretty focused on getting to a major milestone, hopefully an IPO or a major trade sale.
So tell us about the crowd equity funding, because, actually I thought today you were still going to be running it, but it's all closed now.
Yeah.
But before we started recording, you were mentioning that it's a lot more highly developed in the States and in Europe than it is here in Australia, and it's still seen to be a bit like a Patreon account almost here in Australia.
Yeah, exactly. I think crowdsource funding, the legislation, ASIC opening that up, you'd have to check my fact on it, but I think it's only been the last couple of years that it's become a real thing in Australia. Definitely in culture. The legislation's shifted. I can't remember when, but in the US and the UK, it's mainstream. Like 19% of the companies in the UK that have $1 billion valuation or more, utilize crowdsource funding at some point, which meant that they brought on mum and dad type investors to back them at an early stage, to get them through to the next level when a venture capitalist firm or someone like that would take them then to most likely the stock market. In Australia, it's relatively new. Most people don't have early stage investing as part of their portfolio. Even talking to older people that invested with us, the vast majority of them might have a CommSec account, might have some shares, that type of thing, but nearly all of them don't have early stage investing or didn't even know what equity crowdfunding was, which effectively it allows a private company like us that used to be limited to, I think it's 50 shareholders, to now, under the equity crowdsource funding legislation, go out to retail investors as long as we raise less than 5 million and we have less than 25 million in assets, go out and limit each investor to a maximum of 10,000 and raise money from our crowd. Basically, that's the idea. Like, our followers would back us and join us. And we're able to do that. We brought just over a couple of hundred investors on board, and it's a pretty incredible experience because people go from buying a bike, something they get, to actually saying they believe in us and they believe in our vision and they're putting their skin in the game for it. So it motivates me.
And I'm just interested also to hear about the corporate advisory firms that you get, these high net worth individuals who are going to invest in the business.
Yeah.
How much of your time does it take, and what's it like going to see a corporate advisory firm, and what is the kind of information that they need to understand that you are a business that can be taken seriously?
Yeah, it takes a huge amount. Man, I basically haven't done my real job for the last 3 months, 6 months even, because it's been so much compliance work, talking to investors, and before that, convincing the corporate advisory firm that they could represent me. Because they've got to remember, they've got a customer base who trusts them. So they've got to go out and they put on events and nights, and their staff go and meet people and they're talking about us, basically giving like, I guess unofficially and not legally, but really they're endorsing us. So they do a lot of due diligence on us, and it's been great. They've really helped us with the compliance side of it, and introducing us to a lot of new investors. And some of these investors have really got passionate and also got incredible networks themselves. So now my job that we've secured that capital, my job is to go and explore these new relationships and see what doors have been opened for us. And it's interesting. So if I was an investor, which I am, like I have my personal like wealth creation plan outside of my business, but yeah, I think putting early stage investment stuff in as a percentage of your portfolio, something worth considering. Like I definitely would put people like us, like if I said it to everyone who I got to speak to, if you're going to invest in Braap, put us in the high risk, high reward category when we are early stage. So the idea is that you're going to join us now and you're going to get uplift because you've joined us early. And normally in the past, it would be the private and professional investors get to invest, and then it goes public 3, 4, 5, 10 years later, and the retail investors, mum and dads, can invest. Equity crowdfunding allows the mum and dads to get in first, which I think is pretty cool.
Yeah, and it's become so much easier these days to get in on the ground floor on so many different companies. There's a lot of different vehicles which are becoming open to ordinary retail investors that they wouldn't have had access to in the past.
Yeah, I think it's worth, if someone's thinking about it, I'm not affiliated to any of these platforms, so don't take it as an endorsement, but we use Swarmer. They were great. Virtual's awesome. I'm going to use them in the future, one of my other entities. Yeah, there's like, I would just Google crowdsource. Equitize, yeah.
I think it's another one as well.
I think Venture Crowd, I think. So there's some pretty cool ones. And then Wholesale Investor, we've found, they advertise for high net worth, more sophisticated investors who normally they're like 50 to 250 grand minimum investment amounts. But
I think there's a couple of LICs these days as well that specialise in this sort of thing as well.
Yeah. Do you know, what ones do you know there?
Sorry, I wasn't prepared. Bailador.
Okay.
Yeah, Bailador.
Yeah.
And they've got a portfolio of 10 pre-IPO. Well, I think one of the companies is IPO'd in it as well.
Interesting.
And Naos Investments have got a private equity fund as well. It's not so much for startups, it's for what they're looking at is there's a lot of businesses that have been run by boomers who want to retire, and the kids... And they're very profitable businesses, and the kids have got no interest in running the business. And so it's finding vehicles so that these businesses can keep running and be run a little bit more by private equity. Yeah, it's an interesting space.
Interesting. Yeah, I haven't ventured down that way too much, but it really I learned a huge amount about the markets and how it works just through our own exposure to it recently. So always learning.
Yeah, it's great. Okay, so how can listeners find out more about Braap and get one between their legs?
Well, can we do a deal for you today, mate? Okay. So just jump on any of the socials, Braap online, BRAAP. Social media is always good. I'm on LinkedIn if anyone wants to chat to me personally. Just type in Bradley Smith Braap because there's a lot of Bradley Smiths. But if you type in Braap, BraapMotorcycles.com if you're in Australia, and BraapUSA.com if you're overseas. But you'll find us where the algorithm has probably heard that we've mentioned Braap about 50 times, and you're probably going to get targeted by our advertising now. So look out.
Everyone's listening. Alexa's listening. Siri's listening. Yeah. They're all listening. Brad Smith, it's been great chatting with you.
Thank you for having me, mate. I appreciate it. Thanks to everyone for listening on.
If you found this podcast helpful, please tell a friend, especially if it's someone who needs to start thinking about investing for their future. You'll be helping them and helping me to keep this show on the road.
Shares for Beginners is for information and educational purposes only. It isn't financial advice, and you shouldn't buy or sell any investments based on what you've heard here. Any opinion or commentary is the view of the speaker only, not Shares for Beginners. This podcast doesn't replace professional advice regarding your personal financial needs, circumstances, or current situation.
And thank you for listening to my podcast.